and welcome to the ALN Academy Talks. My name is Sonal Sejpal. I'm a partner at ALN Kenya and head the firm's banking and finance department. The ALN Academy Talks aim to promote conversations on rule of law, governance, and sustainability for the development of Africa. Our focus today will be on sustainability, specifically on financing sustainable projects in Africa. I'm delighted to introduce to you Oliver Phillips, an Associate Director of Sustainable Finance at Standard Chartered Bank. Oliver, thank you so much for joining us today.
Thank you for having me.
You know, the title of your department, Sustainable Finance, sounds very fancy. Can you tell us about its objectives and its scope, particularly as regards the African continent?
Well, I think it sort of sounds fancy, but I think it has a very broad remit. Is a simple way to look at it. Ultimately, our objective as a team is to help the bank deliver on its ambition to be net zero from our financing by 2050. So what that means is that our lending book is going to be aligned to being net zero. Reducing the emissions that we as a bank are kind of supporting being emitted through the financing activities that we have. So we are a product agnostic team. We look at everything and anything in the bank that has that ESG label to it, whether that is a debt capital markets issuance, a project financing, a revolving credit facility for a client, but also looking at things like trade finance and derivatives and sort of other bits of the kind of the financial markets world that are arising. We also have an advisory function. So we also help our clients that are maybe a little bit earlier in their ESG journey to help them to kind of do some of the sort of basic things like setting up a strategy and beginning to report on their own criteria for ESG. I think in an African context, our sort of focus is still very much the same, but one of the big themes for us as a bank globally, but I think particularly relevant to the work that we do in Africa, is our focus on a just transition. So it's all well and good that we meet, net zero and the world meets the Paris Agreement. But if it is not done in a responsible way, in a just way, then we're going to have a risk of leaving lots of people behind and actually ending up in a world that probably will have more issues than it would do if the climate challenge, kind of climate crisis, in fact, isn't sort of appropriately dealt with.
I really love that phrase, just transition. But following on from that, Oliver, let me ask you about energy, and in particular, what is Standard Chartered Bank doing to promote green energy and energy efficiency on the African continent?
So we have a couple of sort of global commitments that are really focusing us when it comes to the green side of things. So the first commitment is one that we set back in, I think, 2019 now. That is that by the end of 2024, we will provide $35 billion towards renewable energy and clean technologies. And that could include actual financing that we're doing, but also helping companies to raise funding through M&A, through kind of capital markets. So quite a broad scope. We also have a newer target that we announced in November last year, which is that by 2030, we're going to provide $300 billion of green and transition finance. So obviously a much greater target for that, but also a bit of a wider scope, and really that encapsulates the greenest things, but also helping our clients to kind of move towards being more green. Now, in practice in Africa, that kind of really means that there's a lot that we're trying to do, and ranging from the biggest utility scale projects that we're trying to support, right the way down to some of the smaller kind of projects for our customers, for our clients, and even actually thinking about some of the things we're doing on the retail side. And the good thing about this is that because of the way this team is set up and the fact that we are product agnostic, we're really able to think about that full suite of things that we can offer to make sure that our clients have the right solutions to be able to kind of take advantage of renewable energy or energy efficiency. So we can in one breath be looking at project finance for a multi-100 megawatt wind project in somewhere like Egypt, for example. And at the next moment, we can be looking at perhaps a simple term loan, a much smaller size for a client that wants to install 50 megawatts of solar power on one of their factories in Kenya. But we also tried to use the kind of the trade finance bit, and Standard Chartered at its heart, we are a trade bank, and so we've really focused on what we can do there. And simple things like being able to provide import financing solutions for our clients so that they can actually bring those solar panels from, for example, China into Africa and be able to kind of actually use those panels themselves is quite a valuable sort of offering that we've found. So on the sort of corporate side, I think a wide range. I do want to mention something on the retail side because we in Africa, we do still have a very strong retail presence. It's something that we're very proud of. And that's something that's actually we did in Kenya. Now it's a couple of years ago, but it's still going strong. And that's a partnership that we have in place with Davis and Shirtliff, who are a sort of homegrown producer of different solar and sort of clean solutions. And we were able to provide our retail clients with an offering that meant that they were able to get access to things like rooftop solar solar panels, solar water heaters and solar water purifiers with kind of preferential rates and payment terms through this partnership. So I think also kind of, very useful for us to be able to kind of actually cover that whole spectrum of things, and to also be able to bring something that does support people with our sort of retail customers as well.
Yeah, I mean, 300 billion financing by 2030. That's a phenomenal commitment. I'm particularly interested in what you said about what you're doing on the corporate as well as retail side. Does that mean that as Standard Chartered Bank, you see that financiers have a role to play in the development of renewable energy, particularly on the continent?
I think definitely we do. I think there's a real importance of sort of everybody working together in this. I think it was actually someone else at Standard Chartered who came up with this quote, not me, unfortunately, but they said, if we don't all win, no one wins. And I think when it comes to sustainability, that really is that there's nothing truer than that in my view. And I think it's very important that we're working and collaborating very closely with developers, because for these developers to be able to scale their projects, it's important that they can get funding for it. So understanding from a very early stage of what is it that financiers are looking for, how is it that I make a project bankable, I think it's really important. And it then means that we're able to kind of develop something that can just grow and grow and grow and in a sustainable way, with projects that are properly structured. The financing is put together in a way that's not going to be overly onerous. And we can look at other examples where, for example, the Middle East, which I also cover, we've seen that in the last kind of series of sort of the biggest utility scale solar projects, we've been able to achieve record low tariffs on almost every single one, constantly outdoing themselves. And a key reason for that is the availability of finance is enormous for these project developers. So that cost of funds, which comes into that overall sort of levelized cost that they're kind of charging through the tariff, is able to be brought down in parallel with the technological improvements that are also reducing the cost there. So I think really is important that everybody's working together, and that definitely finance has a huge role to play.
Can you perhaps, Oliver, for our audience, just highlight the main options that there are for financial institutions when they're investing in African projects, and also what your opinion is on the importance of financial growth in a bid to close the financial gap that we are currently experiencing?
I think the great thing is that when it comes to funding renewable projects, there is no shortage of solutions that are out there. And as I've mentioned, we ourselves are really covering that full spectrum. And I think it's important to be covering that full spectrum. Thinking about it from some of the things that we've looked at on the continent, I mean, we've worked with the likes of Access Bank in Nigeria to help them raise a green private placement. That under their green finance framework, they can channel those funds to renewable energy. So that's them raising a bond with our help, and then they're able to then provide those loans to those companies to be able to actually sort of fund the underlying projects themselves. I mentioned at the start that we also look at derivatives in an ESG format, and something that I think we see quite a lot, where people have, particularly if you've got international developers that are coming in and they're signing PPAs, those PPAs are going to be in local currency. So being able to structure kind of green derivatives that are supporting those underlying renewable energy projects and sort of reducing the currency risks makes it more attractive for people to come in. And I think when you sort of look at it holistically, you take advantage of the full spectrum of banking products, not just thinking about a simple term loan. You realize that you can actually help a client to support the entire ecosystem of that project and help them from kind of step 1 to step 2 to step 3, and really be able to kind of ensure that the project is a success. Thinking about the financial gap just quickly, I think the importance of bringing sort of money to where it matters most, sustainable finance where it matters most, is again a key focus for us. When we first, as a bank, issued our own sustainability bond, we did an impact report of the sustainable financing that we as a bank do globally, and it was all of our sustainable financing activities. And we compared an equivalent renewables project in Lucknow to one in Lyon, and we realized that there was a 7 times increase in the amount of emissions avoided. And so this is what's really important about funding these projects in emerging markets is, first of all, there's a massive gap. In Africa, only 10% of the SDGs are being financed compared to 90% if you look in Europe. So there's that massive gap that needs to be met, but the impact is outsized, as that sort of figure shows you. So actually, there's a really compelling story for investors to be channeling the money where it needs to go, and particularly in Africa at the moment, we need that responsible financing to kind of support the wider development of the continent.
Let me ask you a personal question, if I may. Why then do you think Africa should prioritize sustainable growth? Does the continent have bigger fish to fry, or why is it, from your perspective as a financier, why is it now the right time for the continent to address this issue of sustainable growth?
Well, we've talked a lot about green so far, but sustainable finance is both green and social. That S needs to be in focus, and I think unfortunately the S does quite often get left behind a little bit, but it is just as important. And the reality is that sustainable growth needs to be sustainable, and it needs to be sustainable from a sort of economic point of view. If you don't want to grow too fast, too quickly, and not have the right systems in place, but you also want the sort of ESG sustainability to be in place as well, because actually we're going to see things changing in the world. We're going to see things like carbon pricing and carbon border adjustments coming in some markets, which mean if you're exporting to places like Europe, you're going to be penalized. And that actually not taking into account that sustainability could be a major issue. But the fact is that sustainable financing, sustainable growth has that social focus, and in Africa, that's one of the biggest things that I'm trying to drive. And we've had a lot of really great success on the social side. We've helped EcoBank through ETI issue a sustainability bond back in, I think, last year now, about a year ago, the first ever sustainability bond for a bank in Africa. And that was all about supporting SMEs and had a particular bit around supporting women-led entrepreneurs, which was great to see, kind of a dedicated focus on the gender piece. But we're also doing a lot of sort of social infrastructure financing, whether that is something like a road that connects rural communities in Ghana to a recent deal that we just announced with the UK Export Credit Agency, UKEF, in Senegal, to import sort of vital kind of first response equipment for firefighting, for kind of general life saving, and all of these things, which is something that is just such a sort of basic necessity to have. So thinking about that sustainability as very much a part of growth, I think is not only essential for addressing some of the challenges now, but setting up for the next decades to come, in a way that is going to continue to be sustainable.
Yeah, no, it's super interesting. Let me, before I end, I think I just want us to touch on the issue of natural capital. And by that, of course, I mean habitat credits, wetlands mitigation banking credits, water quality credits, and of course, the best known carbon credits. Do you, as Standard Chartered Bank, have any plans to include monetization of natural resources into your future strategy?
Well, let me first start by kind of what we've been doing previously, and that's been really a focus on protecting the natural environment. And I think any monetization needs to start with that. How do you start making sure you're protecting things? Through our environmental and social risk management team, we've had a really big focus on thinking about, well, how do you make sure that when projects happen, they happen in the right way? And you're looking at the natural environment, you're looking at the biodiversity and the impact of these. There's going to be some impact. How do you mitigate that? How do you manage that in the best possible way? So we've had a big focus on that, and we were one of the earliest signatories for the task force on nature-related financial disclosures, and actually Standard Chartered was privileged to be one of the launch members for the Africa Natural Capital Alliance that FSD Africa started only a couple of weeks ago now. Which is really trying to bring the voice of Africa to the global discussions on nature, because I think there's so much importance of African nature that gets overlooked. The Amazon and the things that are happening there make a lot of headlines, but people forget about the Congo Basin, and the fact that actually the Congo Basin is also a massive carbon sink, and so it really is important to be protecting things like that. Now, for us, monetizing the carbon piece is very important. As a bank, we're doing a lot to try and promote this. We took a key role in the task force on scaling voluntary carbon markets, which our group CEO, Bill Winters, actually chaired. We're playing a lead role in the Integrity Council for the voluntary carbon markets, which is now implementing the recommendations of the TSVCM. And we're also looking at things where we can partner with others, for example, in Singapore, where we've launched an exchange called Climate Impact X that will allow projects in Africa to sell their carbon credits into the Asian market. And something we're really focused in is how do we use that platform and that position that we have there to connect into the continent. But more broadly, I think that monetizing carbon and natural capital more broadly has a potentially huge benefit for sovereigns and corporates and banks in Africa, because it's a new stream for debt repayment. And that's, I think, really, really crucial, especially at a time when the global economy is in a bit of turmoil. And we're seeing, particularly in some markets in Africa, a lot of focus on their ability to service their debt. Being able to find a new stream of revenue that potentially attracts some new investors who have that ESG focus and potentially, refinance some of your other debt using this new things. We see lots of talk about debt for nature swaps, debt for carbon swaps. and those sorts of things, I think provides a really valuable tool. But it needs to be done right. There are a lot of pitfalls in this area, and I think it's very important to tread carefully. But it is one area that I think we're really excited about the potential that this actually has to bring to the continent.
Mm. Oliver, thank you so much. That was really, really interesting, and I've learned so much. Before I close, do you have any parting words for the audience?
I think my parting words really are around kind of the importance of what happened in COP and the great announcements coming true. I think COP26, we saw some brilliant commitments, but we really need to see the delivery. And with COP27 this year in Africa, in Egypt, I think that's really, really crucial. We produced a report called Just in Time, which focuses on the just transition. And we've identified something like a $95 trillion opportunity that's going to come there. But we also did some analysis on what happens if developed markets finance the just transition in emerging markets, or if emerging markets have to self-finance, so through increased taxation and things like that. And we actually found that the overall impact on the globe is going to be worse if emerging markets have to do this. But if developed markets play a role, it's going to improve the situation, not just for the emerging markets themselves, but for the overall global markets and the global economy. So I think it's really, really important that we see those commitments that were the right things to be made, and they're great that the commitments have been made, but we need to see those being delivered and sort of action speaking louder than words.
Fantastic. Oliver, thank you so much for your time today, and thank you also to our audience. This conversation will be available on our ALN Academy podcast and YouTube channel. Remember to subscribe to be notified when we upload more content. Thank you so much, and see you in our next talk.